What is a revenue crowdfunding? Generally, revenue crowdfunding is alike to the original concept of stock investment. The mechanism of this type of crowdfunding is implemented as you as investor places forward some funds to help start their project or company, and as a reward, you get a return from future sales. Instead of stock or equity, you will receive a small portion of the company's revenue for a short period of time. Similar to collecting a royalty, but instead of a permanent percentage, until a company reaches a goal, you will be collecting the company's money, no matter if the goal is reached or not. However, it is very controversial, and some companies find it counterintuitive and evil. But revenue sharing is particularly attractive for businesses with seasonal sales. When your business is good, you pay back more, and when sales are slower, payments will go down as well. Revenue sharing makes the investment process simpler, as it does not deal with the complexity of equity, as the investors are not owners of the business. In other words, you will be receiving similar return as dividend in stock investment, but irregular in amount depending the performance of the business. Now, let us see how this revenue crowdfunding works. Here is how it works in a simplified example. Firm A offers to reimburse investors 1.5 times their investment by paying 0.5% of revenues until they have paid off the multiple. Investor B loans Firm A $1,000 to expand its business. With the 1.5 time multiple, Firm A is contracted to repay Investor B a total of $1,500. If Firm A makes $100,000 annually, it will pay back its debt in 3 years at a rate of $500 per year. But if Firm A only brings in $50,000 annually, it will pay Investor B $250 per year, taking 6 years to pay off the loan. Therefore, the repayment time and the effective interest rate are variable, depend upon the revenues of the firm. When business is good, payback is fast and the interest rate is high. When business lags, payback is lower and the interest rate is lower. Now, let us see how
crowdfunding sites provide an online marketplace that meets small and medium-sized firms needing to raise capital with individuals looking to invest in promising new products and services. The newest version of this model pioneered on sites such as Bolster, Locustreet, and Startwise.
As of today, there seems to be not much development of revenue crowdfunding legal framework by the related authorities. The only available explanation is that in Malaysia, non-equity crowdfunding operates like societies or non-profit organizations, in which are governed by the Societies Act 1966. Registered societies are required to keep proper accounts and to publish and file their audited financial statements with the Registrar of Societies. Members of the registered society will vote whether to buy off the financial statements or not in a general meeting. As of today, there seems to be not much.
The first company is Bolster Incorporation. It has become the model of the most promising revenue sharing crowdfunding in the world. It has successfully raised about $2.3 million funds for the businesses since its establishment in 2011. Bolster also raised an undisclosed amount from Fusion Fund. In 2018, Bolster has been acquired by KeyBank that said to ease the loans and transactions for Small Business Administrations (SBA). With KeyBank, Bolster also designed to boost the small business loan for about $2.5 billion commitment in 5 years onward. The second company is Statwise, that successfully raised fund for a pet care company with $90,000 and a shoe company with $150,000. Since it has been licensed by SEC, it does due diligence on the business to start crowdfunding on its platform. Statwise also helped non-Silicon Valley company, which is non-technology company, to ensure geographical diversity. The third company is Local Stake Limited. It has successfully raised about $16 million in total revenue funding for the Small Business Administration. It also sponsors Local Vesting Money, which is an investing news education and resources company. It also awarded by SEC a license to enter IPO. In 2014, Local Stake has announced a partnership with ZAC CF Research as it offers their specialty in firm valuation and rating reports for Local Stake benefits. Alright, for the next part is risk in revenue sharing crowdfunding. The first one is no such secondary market. There is no market for revenue share securities, and it is not expected that any market will be developed in the foreseeable future. Second, the company are not generate sufficient revenue. In the event that company issuing the revenue share securities does not generate sufficient revenues from operations, investor may not receive any return at all and or may lose a substantial portion or possibly all of their investment amounts. Third one, required payment are not guaranteed. By investing in private placement relating to loans or revenue sharing securities, companies are required to make payments on a recurring basis. These payments may not be received due to financial or other difficulties experienced by the company. Investors must be prepared to bear the risk of not receiving their expected payments. Equity securities often do not come with required payments. Fourth, revenue share securities are unsecured obligations of the company issuing them, and in the event of a default under the revenue share securities, investor will not have recourse against the assets of the company, and rights that the investor may have under the revenue share agreement will be subordinate to the company's lenders, if any. Last but not least, investor may receive no return on investment. There can be no assurance that a prospective investor will receive any return on any investment or realize any profit on such prospective investors' investment. The early stage companies raising capital on Local Stake likely has never made any distributions to investors and likely operate under a policy to retain earnings, if any, to provide funds for the operations and expansion of the business.
For the conclusion, revenue sharing is largely an untapped market. Most of the platforms focus on equity crowdfunding and startups. Revenue sharing provides the alternative capital option for small businesses, enabling them to tap into the consumers for support and pay them back as they grow their business. Revenue sharing enables us to offer accessible investment mechanism since it is the easy to understand type of investment that doesn't require a high level of expertise. It does, however, offer the opportunity to get a financial return even if you invest as small as $100. For the conclusion, revenue sharing is largely an untapped market. Most of the platforms focus on equity crowdfunding and startups. Revenue sharing provides the alternative capital option for small businesses, enabling them to tap into the consumers for support and pay them back as they grow their business. Revenue sharing enables us to offer accessible investment mechanism since it is the easy to understand type of investment that doesn't require a high level of expertise. It does, however, offer the opportunity to get a financial return even if you invest as small as $100. For the conclusion, revenue sharing is largely an untapped market. Most of the platforms